There has been a series of good news stories for Tesla in the past few weeks, and it's expected that more of this is going to get reported on in the coming months. Tesla has experienced exponential growth in demand and revenue over the past few months, and it won't be surprising if Tesla keeps recording high demand and revenue numbers for all quarters in 2023. Hey guys, welcome back to Tesla Tomorrow. Tesla's growth has been incredible over the past year, and while this journey has not always been as smooth for the EV maker, Tesla is still standing strong in the industry and is on point to become the most valuable company in the world, just as CEO Elon Musk had predicted. Musk had previously said that Tesla will one day be the world's most valuable company, and it will be worth more than the tech company Apple and Saudi Arabian oil company Saudi Aramco combined. What are the other latest growth stories for Tesla? Let's find out. But before we do, if you like this type of content, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. One strong piece of evidence of Tesla's growth in 2023 is being able to make sales in China, which in January came out stronger than expected, according to data published by the China Passenger Car Association. Tesla sold 66,051 Chinese-made electric vehicles in January, up 18 from December, while the U.S. electric car maker sold 55,796 Chinese-made vehicles, 10 higher versus January last year. It's a big boost in Tesla's sales in China, which followed a series of price increases in the world's biggest car market, which consequently caused Tesla shares to move higher. Tesla began cutting costs of its Model 3 and Y vehicles in China last October, with similar reductions unveiled in the U.S. shortly after, and then deepened them earlier in January. The automaker reduced the starting price of its Model 3 sedan by around 13.5% in China, according to data from its website, and lowered the price of its Model Y by around 10 to 37,660 as it deals with increasing competition from China-based rivals and the world's biggest car market, according to the Musk. The Chinese market is the most competitive as they work the hardest and the smartest. It's added that he has a lot of respect for the China car companies that Tesla is competing against, while further stating that the Tesla China team is winning in China and he thinks that the company can attract the best talent in China. Tesla was also the second best-selling electric vehicle maker in China in January after Ford, which shipped 150,164 cars. The Tesla Shanghai plant in December cut output by about a third from November and extended a Lunar New Year holiday period for workers in January to cope with rising inventory. The company now plans to step up output at its Shanghai plant over the next 2 months to meet demand spurred by price cuts early last month on its best-selling models. Following Tesla's price cut in China, the company allowed slash prices of its cars in the United States, which resulted in massive demand for its cars. Tesla CEO Elon Musk recently told investors that orders for the month of January to date were the strongest in the company's history and were nearly twice the rate of Tesla's global production. In similar news, recent reports on electric vehicles tax-ready show all Tesla SUVs now qualify for $7,500 in tax credits, according to the Internal Revenue Service. Tesla's modeled white model and other electric vehicles from auto manufacturers, including Ford, General Motors, and Volkswagen, will now qualify for a federal tax credit of $7,500. Not just that, a fully loaded Tesla Model Y Performance with FSD also qualifies for the $7,500 EB tax credit. The change comes after the Treasury Department revised its vehicle classifications in a way that broadens the definition of what qualifies as an SUV, which has a higher price threshold to qualify for the tax credit. Previously, the 5-seat Tesla Model Y was classified as a sedan, which meant it didn't qualify for the EV tax credit because it cost more than $55,000, as stipulated under the government's rules, while it was expected that the Tesla EBS would qualify for this tax credit. The fact that other Tesla models are overlooked comes as a surprise to many Tesla investors and bulls. On the recent list released by the IRS, not all Tesla Model Y vehicles qualify for the tax credit, as the IRS claims that these cars are not classified as SUVs according to the IRS, since there's an applicable MSRP limit of $55,000 for electric cars and $80,000 as an SRP limit for electric SUVs. Trucks and vans to Tesla Model, a sedan, and X SUV were not eligible for the $7,500 tax credit. This is because the Model starts at around $105,000 and the X is priced at approximately $121,000. Reacting to this, Musk, he stated his dissatisfaction with the earlier classification. The tax credits stem from the Biden administration's Inflation Reduction Act, which provides billions in rebates for EVs and home upgrades geared towards shifting consumers away from fossil fuels. However, recent users confirmed that the Model Y is now eligible for the tax credits. The Internal Revenue Service recently published a list of electric and plug-in hybrid vehicles that are eligible for federal tax credits under the new Inflation Reduction Act. The list includes several Tesla models, as the new law has eliminated the tax credit cap for automakers that hit 200,000 electric vehicles sold and is valid for purchases made on or after the 1st of January 2023. The Inflation Reduction Act also has several credits available for electric vehicle charging. There is a property credit for companies that install electric vehicle chargers. The IRS will offset up to 50% of the total costs of purchase and installation of charging equipment up to $100,000 per charger by expanding the number of Tesla SUVs that qualify for the full 7,500 tax credit. This could spur consumer demand for these electric vehicles, given that the crossover SUV is one of the fastest-growing auto segments. According to Albert Gore, Executive Director of the Zero Emission Transportation Association, the congressional intent with the Internal Revenue Service and the Clean Vehicle Tax Credit was to rapidly accelerate the deployment of qualified EVs, and today's decision is a big step towards that goal. He added that the body has long advocated for the ERA's tax credits to be as widely accessible as possible, although it could be said that inflation and high cost of living can lower the demands for electric cars. What the Tesla bears miss is that brand. Innovation and news will drive potential customers to Tesla stores and the Tesla website. This is particularly an advantage for other upcoming Tesla vehicles like the Cybertruck. Tesla is already a popular brand that needs little to no marketing to get its products out to potential customers. Tesla makes great cars, which is why it is no surprise that its customers tend to stick with the brand when changing cars. The car company recently ranked second behind Genesis in the latest Consumer Reports Most Loved Brand ranking. Consumer Reports surveyed more than 300,000 vehicles from among their large subscriber base. The owner satisfaction score was calculated from the percentage of owners who indicated that they would buy a particular brand if they had to choose again. Tesla came in second in the latest ranking of most loved car brands by Consumer Reports, beating out other brands like Toyota and Mercedes. The automaker has been confirmed as the second car brand that buyers will most likely buy again. Tesla Brown was only topped by Genesis by a few points, with other car companies like BMW. Subaru and Lexus are making the list of the top 5 companies. Tesla's recent price cut has been a huge catalyst for the company's stock, as several analysts are starting to upgrade their price target for the automaker's stock price in 2023. With Tesla's strong profits heading into 2022 and new expansions and production plans set to begin this year, some bulls are doubling down on their support for the automaker's stock, according to Berenberg. Tesla is a beaten-down stock worth buying now, following price increases. Berenberg bank stock analyst Adrian Janaszek also upgraded Tesla stock to buy from hold. Ross German, who is the CEO of Kawasaki Wealth and Investment Management, stated that he believes that Tesla's price cuts reflect its cost leadership strategy, adding that these cuts could also be a blip as margins recover with products shifting away from its California plant, which has higher labor costs, old equipment, and an inefficient design. There's no doubt that as the world transitions to a clean energy and transportation future, there's only been one company that's driven this amazing innovation in electric vehicles and now in energy storage, and that the car company is actually Tesla. Analysis has pointed to a handful of factors surrounding the company that will be potential boosters for its growth. The anarchic sees the car company improving efficiency in capital and labor, and he also sees battery cell production as another opportunity for the company to scale. Tesla performs like a car company on the market rather than a software or tech company, and so its growth potential may not be fully recognized. Tesla is pricing to drive volumes in the hopes of keeping itself competitive with new electric vehicle launches, and the automaker could see market share and a gross margin grow significantly. A higher proportion of production from new, more efficient plants, including Shanghai, Berlin, and Austin, is going to help offset margins. Looking ahead and following the price cuts, Tesla has guided a strong outlook with a strong order intake expected in the coming years. What is your valuation on Tesla? Let us know down below. And if you want to see more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen.